Cash flow is one of the most important aspects of your business. If you're not sure what cash flow is, then it's just simply the ins and outs of the cash coming in and out of your business. And it's crucial, it's the most important thing. You want to make a profit, but without the cash to support that profit, you cannot continue in business. Some 82% of businesses fail because of poor cash flow management. This is how big and important it is for your business. That's a significant number. So you really want to stay on top of your cash flow. What is cash flow? Cash flow is that money coming in and it's coming out. This includes things like loan payments, inventory purchases, sales, selling assets, anything that's just pure cash coming in and out. This is not your profit, this is not your bottom line. This is just cash. Think of it more like your personal check register. This is what cash flow is. It's just what your bank balance is. And so you want to keep that number positive. You want to have positive cash flow, which is having enough money to cover your expenses and any of your obligations. Negative cash flow is not what you want to see. You want to have enough money to cover your obligations, where negative is not being able to cover any of your obligations. To start solving these problems, you're going to need to look at loans and selling assets and other pretty drastic steps to fix these things. So we want to help you not get to that point. What's the difference between cash flow and profit? Well, profit is simply put your bottom line. This is all of my income, my cost of goods sold, all of my operating expenses, and this is what I have left. This is what I'm paying taxes on, my bottom line. And so this thing includes depreciation and interest payments on your loans and operating expenses, but it doesn't include loan payments. Loan payments do not go towards your profit. It's a common misconception, but that's not where it goes. These are a liability. So that's not it affects your cash flow, but does not affect your profit. So cash flow measures things like your loan payments and other similar payments that don't go onto that profit statement where you show your bottom line, because they don't affect your taxable income, but they do affect what you have in the bank. This is money coming out, but not necessarily taxable expense or income. Why is cash flow so important? It's one of the most common reasons why businesses fail. A lot of times you'll see someone with a huge bottom line, they made $1 million, but all of that's sitting in accounts receivable, not in the bank account. If you're making money, but you're not actually receiving the money, you're dead in the water. You can't, it's a boat without a paddle. You have no options at that point for your business. You make all the money in the world, but without the money actually ever coming in and hitting your bank account, you have nothing. So that's what cash flow is. That is making sure you can meet your obligations and continue to stay in business without having to go to drastic measures as far as just getting major loans, selling your assets, firing employees, because these are all things that can happen if you have gotten your cash flow out of hand. We got a few tips for helping you manage your cash flow. For one, staying on top of your bookkeeping, knowing what's coming in and going out are huge. Two would be generate a cash flow statement. An accountant can help you do this, or if you're using a accounting software similar like QuickBooks, they can also generate these cash flow statements for you. Knowing what your cash flow cycle is. So if you've got a business that's seasonal, so if you're an accountant and most of your work happens in the first 4 months of the year, or most of your income is coming in the first 4 months of the year, where your expenses don't necessarily change May through December, but your income can. You can receive all your income January through April, but your expenses don't change the rest of the year. So you have to properly manage and know, when does my cash come in, but I still need it for the future. This is budgeting. This is looking at what I'm doing now, what I'm doing in the future, and how the cycle of your business flows. And by looking at where you've been and what you're doing, what's happening in your business, and if you need more cash now or more cash in the future. Just because you have a lot of money coming in right now doesn't mean you should go out and buy a new expensive printer or hire extra employees, because you may get 2-3 months down the road because of your business cycle and not need those things or be able to afford those things. So another thing would be urging your customers to pay on time. And this is huge. If you're not receiving the money, you can't spend the money. And there's several things to do to help manage this. You can send invoice reminders, allowing your customers to pay online, not sitting on your billables. If you've done work for somebody or you've sold something and they've taken it, send the invoice, send them the bill, send reminders for that bill. Don't let it just sit there and get stale, because then you forget and they forget. And another option would be offering a discount. So if people want to pay in advance, give them a little discount. You made a little bit less profit, but you have the cash to continue operating. And another thing would be cutting costs. Watching your expenditures is a huge thing as far as your cash flow. Don't buy unnecessary things. Look at your supplies. Well, do I need to buy this bulk whiteout, or can I wait? And if you can wait. Like, there's other drastic measures like getting rid of employees, which is a really hard step to take. So you want to look at other areas to do before you have to get to that point. Another thing would be paying off debt. This seems a little counterintuitive because you're spending out chunks of cash, but you're saving future cash by saving on your interest and your monthly loan payments. Another area would be to start selling assets. And now this is one of your last resorts. Like, big time, I'm in trouble, I'm drowning, I have to get cash now, would be, well, I have this big building, I could operate in a smaller one, so I'm gonna sell my building, get the equity, buy a smaller building, and then I have extra cash laying around. And a similar step would be getting loans or a line of credit. These are gonna help you with cash flow now. There's not current cash flow, so if you need an interjection of cash real fast, go get that line of credit, go get that loan, whatever you need to do. But just remember that these are going to affect your future cash flows with monthly loan payments and interest and things like that. So they will get you money now, but it will affect you in the future. Not saying you shouldn't do that, but you do have to take into effect what you need now and what you need in the future, because both are your business and you can't just operate in the now. Like, subscribe, share this video with a few of your friends, and thanks for watching. Have a great day.